Hey everyone, and welcome back to my channel. I'd just like to thank everyone who's been tuning in. This is now part 2 of our 3-part series on how to work with investors. So once again, this video series is geared towards the realtors who are looking to increase the number of transactions they're doing per year by working with investment real estate. So in our last video, we talked a little bit about what investors are actually looking for when they're getting into investment real estate, and that was primarily cash flow and return on investment. You can check out that video right over here. Today, we're going to be focusing on the different types of strategies that investors employ to get the different types of returns they're looking for. Once again, this is a very basic introduction to these different strategies, and there's multiple more advanced strategies that I'm not going to talk about. These are just some of the basics. So I highly recommend you go to some seminars, go to some different networking groups to understand all the different strategies that are out there and how the different investors employ those strategies. So the first strategy we're going to talk about is called buy, rent, and hold. Now, buy, rent, and hold is your traditional form of investing. It's where you buy a rental property and you hold on to it for the long term. Most investors, when they're getting into rental properties, they're looking for two main things. Once again, it's cash flow that we talked about in the last video, and the 3 centers of returns, which we talked about in the 3-course meal. That is cash on cash, equity, and getting appreciation. So that is what they're typically looking for when they're purchasing these types of properties. Now, typical hold time on these properties is 5 to 10 years on average, where people will hold on to them, keep them rented out, building that equity as the tenants pay down their mortgages, and eventually they'll either decide, are they going to keep those properties, tap into that equity to buy more, or are they going to sell them and once again tap into that equity and any appreciation they gained. So the best strategy, obviously, if you have clients that are looking just to help build for retirement, is to buy these properties and hold them for the long term. People who own these properties for 20, 30 years end up seeing massive amounts of appreciation over the long term, because that's where real appreciation is gained, is in the long term. The next strategy we're going to talk about is called buy, fix, and sell, or as it's more commonly referred to in a lot of the TV shows, flipping houses. So in this strategy, people are purchasing properties that they can do the 4th part of a return, which is to force that value up or force the appreciation on the property. This is done by doing upgrades or updates throughout the home. A lot of times investors will go in, they'll purchase a property at a lower price because it's dated, it's older, maybe it's in rough condition. They'll renovate it, new kitchens, new bathrooms, new flooring, whatever it takes to get that property looking to what it should sell for at a normal market. Or because they updated that property and made it more attractive to buyers, it actually forces that value up into those comparable markets where you're competing against some newer product. This is what's commonly known as flipping houses. Now, this is an active income strategy, so it's not as much on the long term, because properties are typically held between 4 to 6 months, maybe a little longer if it's a really big renovation job, but not much more than that. So they're constantly turning over inventory that they have to replace. So another active income strategy we're going to briefly talk about is called wholesaling. So wholesaling is the act of taking a contracted purchase and sale on a property that you're looking to purchase and actually selling that contract to another person without ever actually owning the home. Essentially, you're just making some quick profit on the transaction to that other person because you might have locked up a property at a really good deal. Now, this is a strategy a lot of people do, especially after coming out of seminars, where they realize they don't necessarily have the capital to start purchasing properties, and this is a way they can still be involved in real estate and earn a little bit of an active income to get started and build their first down payment. Now, this is really market dependent, I find, because some markets, especially some areas in the States, I know people who were buying from wholesalers all day long. Areas like Vancouver, I find it very difficult, because if you're someone who's looking to do a wholesale, sometimes you have to lock up that property for a while before you find that investor who's looking to do it. And in fast-moving markets like ours, it doesn't always work out well. Now, the biggest thing when you're working with people who are doing wholesaling is you need to make sure you disclose. Be upfront about everything, so no surprises happen when all of a sudden you sell that piece of paper to somebody else who's going to be purchasing that property. And the last strategy I'm going to talk about today is multifamily investing. So this is buying big buildings. You're not just buying an individual house or an individual condo. You're buying a building with many units under one roof. Now, this is where I've been operating. As an investor myself, I've started buying multifamily properties, and I really like it because investors who operate in this realm are buying because they want an economy of scale. People who are getting into the multifamily, obviously because it's commercial, it's going to be more expensive, you're buying bigger buildings, you definitely have to have some larger amount of money for down payments. So this is one that's, I wouldn't say for the faint of heart. You would definitely want to have some deeper pockets or access to deeper capital. And not only that, you have to be willing to put money out front to find out if it's a good deal or not. So this is definitely one that more investors start transitioning to over the years if they're doing this on a more full-time basis, but not everyone's going to go for it. So definitely, if you're operating in the multifamily realm, there's huge opportunities. The properties are based on income versus the market necessarily. Obviously, the market affects the type of income these properties receive, but the valuation is based on the performance of these buildings. And that's also used in the qualification qualifying. So a little bit easier to qualify from a personal standpoint, a little bit harder because you're dealing in commercial financing. So once again, it's very good to be familiar with the multifamily strategy. As your investors are building portfolios, they may want to shift that portfolio into multifamily buildings. Now, those are just 4 strategies that I shared with you today. There are so many out there, whether they're buying commercial warehouse units, or they're doing rent to owns or agreements for sales. There's so many other different strategies that are more advanced, but to get you started working with investors, these are 4 of the basic strategies that they employ to get themselves started. As a realtor working with investors, it's very important that you know these basics and you know how to evaluate the deals in each one of these basic categories. When you're armed with these tools, then you can start expanding into advanced strategies that allow you to then give more options to your investors. All right, and that wraps up part 2 of our 3-part series of how to work with investors. Next week, we're going to be talking about where you actually go to find some of these investor clients. So if you don't want to miss that, make sure you go and hit that subscribe button right here so you can tune in next week. Once again, if you missed our last video, make sure you go and check that one out. That is all on what exactly are investors looking for when they're looking at these strategies. If you like this video, don't forget, give me a big thumbs up and throw some comments below. What are some strategies you've seen, or how have you gotten created when working with investors? And guys, I'll see you next week.